Hello everyone and welcome to another educational video from the Traders Academy Club. My name is Jordan Kuzmanov and today we are going to talk about the Parabolic SAR indicator, or as traders refer to it, the PSAR. Now the first thing we need to cover is basically what the PSAR is, to give it some very short introduction and just to say a few words about it. In the technical analysis, Parabolic SAR, or as the full name is, a parabolic stop and reverse, is an indicator developed by Mr. Wilder Jr. and the indicator aims to find potential reversals in the market. Now this is super important right here, guys, so pay very close attention to this one. The indicator works in trending markets, okay? It is not supposed to work in a ranging market. So you want to have a clear trend up or clear trend to the downside, and ideally, if you're going to be using only one time frame, you want to see nice legs or waves developing within that trend. Okay, if you see a trend which is being developed in pretty much one straight leg like this without major and healthy pullbacks, the PSAR is not going to be of much use, of course, when it comes to entries. If it comes to just identifying the trend, then it will be fine. But if you're looking for entries, you need to see these pullbacks being developed during the actual trend. Okay, so if the market is flat and going up and down like this, it's not going to work very well. It's not going to work at all, actually. And what we call whipsaws will be created during that ranging sideways phases. What else we can say is that this is a lagging indicator. What a lagging indicator means is that basically it takes some numbers from the history, from the previous bars. Okay, so if current price is here, we look back, we check out a few bars, we calculate a few things behind it, and then it gives us the output. All right, and then we can say that the indicator has these main functions. First of all, we can identify the direction if we use it on multi time frames. Then we can use it as trailing stop. Okay, and you're gonna understand what I mean by trailing stop in a few minutes. We can also determine entry or exit points, right, as long as we're in a given direction. This is exactly what I told you just a few seconds ago. So if we have nice swings inside that trend, we can use the Parabolic SAR as entry point, respectively as exit point as well. Now, how does it work? The formula, I really don't care about it too much. If you would like to see how the formula, what is the formula and how is it calculated, I'm sure you can find it online. But we really want to see how to use the output of this indicator, which is going to be the focus in this video. Okay, so the Parabolic SAR is shown on the chart as small dots. So you have the bars and you're going to see a dot below or above the bar, and the position of the dot, whether it's going to be below or above, depends on the trend. So as a rule of the thumb, we can say that when the trend is moving up, when we have bullish trend, meaning higher highs and higher lows, the dots are going to be below the candles or the bars, and vice versa. When we have bearish trend or downtrend, the dots are going to be on the very top of it. Okay, let me see if I'm missing something. The parabolic sign graphically shown on the chart. All right, so default settings by default, you're going to find this indicator built in pretty much any platform out there. The examples in this specific video are based on the MT4 platform, and this screenshot is taken from the MT4 platform. The defaults are step 0.02 and maximum is also 0.2, just one less zeros. And as to the style, it's entirely up to you to decide how you want to represent it on the chart visually. Now, this is an example of how the parabolic SAR looks like. Basically, these blue dots that you can see below and above the price is the parabolic SAR indicator, okay, the PSAR. And you'll notice here something very interesting. I picked this example on purpose because I wanted to demonstrate you how it looks in trending situations and how it looks inside arranging situations. Remember what we said just a few slides ago? When it's inside a range, the parabolic SAR doesn't really give us much. And this rectangle here marks exactly that, a flat move, a range, a sideways move. Okay? This is where you can see switch, 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 switch. The dots are flipping around the price constantly. And to be honest, we can actually use that feature of the parabolic SAR in a reversed order. Instead of complaining about it that it doesn't work in sideways moves, we can use it to identify sideways moves. Many people have problems identifying these corrective flat faces of the market, and that could be done in many ways. But using the parabolic SAR is extremely easy because it's very visual. You can see the price going up and down, and the dots are constantly switching from top to bottom, top, bottom, top, bottom, and so on and so forth. Whilst as to when we have the bullish trend, pardon, for example, right, we're moving overall in a bullish trend here. The price is moving higher with this small consolidation phase. You can see that it would be working more or less nice. And now comes the question probably to your head, but how do I know if the next signal, meaning the price, the dots are above and then it switches to go below, and this is basically the buy signal. How do I know if this signal is valid or not? Okay, and that would be a very logical question, and that's why I'm going to present to you a very simple way, a method that I'm using, and it's absolutely fascinating how easy it is because it's super visual and it doesn't take much. Now, what I did here is I've plotted two moving averages on the chart. Right, the yellow one is MA20 and the red one is MA50. You really can change these numbers to whatever you want. That could be 50 and 100, that could be 100 and 200, 100 and 150. It really depends on what you'd like to catch from the markets and also what instrument you're trading. But in general, as long as you have approximately 100% difference in between, so let's say the fast MA is twice as smaller from the slow MA, okay, it wouldn't really matter. But the idea with these two MAs is to catch the direction of the trend and tell us, if we want to use only one time frame, tell us in which direction to trade. So let's say I would like to trade the 4-hour charts, and instead of going to the daily chart and doing multi-time frame analysis, which would probably be complex for some people and complicate the purpose of this video, let's assume we're going to use only one time frame. And to pick the direction, we're going to use these two MAs. The idea here would be very simple. Once we get the cross, of these MAs, and both MAs are sloping, meaning they are pointing up. Okay, we know the trend is starting to be developed. This is where we want to see, in most of the times, a pullback, and during that time the faster MA will start turning lower a bit. That really doesn't matter. The question is what happens with the slower MA, and the slower MA we want to see sloping in that very same direction. Okay, so the fast MA is used for the crossover to give us the idea that we're getting a crossover and probably a change in direction, and then we start focusing on the parabolic SAR. So this is our cross, and from that moment on we say, all right, we're looking for possible bullish momentum. Of course, best would be to put some time into price action, okay, how to read price action and so on. But for the purpose again of this video and that example, we're just going to use the two MAs. Anyhow, we have beautiful push upwards, okay, MAs are crossing, and then we got the pullback. And once the pullback started, right here on this bar, you can see the parabolic SAR changed from the bottom and it went to the top. That means we are currently in bearish mode. And this is how we kind of lock the price in between the parabolic SAR and the moving average. So now the idea is, once we get a bullish signal, meaning the dots are changed from one place to the other, we want to start looking for the buys. Okay, I think we got the switch here also, which would give us a false signal, and that would be a stop loss. But on the very next one, we're getting the real move afterwards. And of course, this is where money management and the risk reward comes in play, but this is not the purpose of the video. So this is a very simple and elegant strategy. Here we can include further filters, meaning you would like to see the price going below the yellow line before you go ahead and buy, to be more conservative, basically to lock the price again in between the two MAs, and the parabolic SAR to be in corrective mode, meaning opposite of the direction. So if the direction of the trend is bullish, we want parabolic SAR to be bearish, like we have it here. And then once we have the price in between the two MAs, we start looking for the signals. What's the purpose of this filter? Very simple, guys. You can see that in this case, for example, we also got the consolidation and parabolic SAR changed, which means we're going to have a signal right here. But then usually we're going to be already in an extreme, and that means the move that follows might be limited. Okay, that's why the idea is to have the price below the fast MA and above the slow one. And ideally, this is where you want to see the breakout happening. So in that case, it worked, but we already got a cross down here, and the price is trading below the 50 MA and so on and so on. So this signal based on this strategy would not be ideal, even though it worked. Okay, and of course this is just a sample example of how you can determine the trades. Another way to do it would be by using no indicators at all, just pure price action. You're drawing trend lines, and once the price comes closer to that trend line inside the channel and you get the reversal signal, you attack with the parabolic SAR. Or you can go to the multi-time frame analysis direction and take the direction from the daily chart, then drop to the lower time frames as the 4-hour chart, and then look for this signal to the buy side. Literally millions of ways to trade it. Okay, this example here with the MAs is just to show you the idea and the direction we're going in. Here is an idea, not idea, but example for the sales. Very short-term lift, cross to the upside, and then immediately the price is crossing lower. Again, we have the 4-hour chart. This time the pair is different. But once that happened, you can see very strong move to the downside. Lows are being broken. It means the trend down is very strong. And this is where we have pullback. The parabolic SAR switches from the top. It becomes and goes to the bottom of the candles. And then this is our sell signal right here on the very first bar. Parabolic SAR switches to the upside. Okay, we have the same idea here. Price moves inside these MAs, breaks below, and so on and so on and so on. So this is pretty much the idea of parabolic SAR. Of course, you can use it as trailing stop, as we said before that. And now I invite you to go ahead and check out the Traders Academy Co-op. Also, check out our free Telegram channel for more educational materials and trade ideas and setups from myself and Vladimir Rybakov. Thank you for watching and have a wonderful day.